Hello guys, it's another moment that I'm going to explain to you some of the concepts. Today I'm just going to explain about the trade. And as you know, there are various types of trade in a market, and there are four in type. One is an up trade, second is down trade, third is raging trade, the fourth one is choppy trade. For the case of the up trade, this here, let me show you an example. An example of an up trade here is from here. Sorry guys. An up trade, want to elaborate to you a good example that you can understand. This one. These are up trade. As you can see, they moved from the bottom to the upper side. Let me expound it so that you can see it clearly. These are up trade. As you can see, it moved from the bottom to the upper side. And for the upper trade, it must break the previous low highs. What do I mean by the low highs? You will realize that low highs and low low, they are identified in a down trade. For example, here, these are down trade. This one, these are down trade up to here. You realize that the market moved from this point. It moved from here. The market moved from here to the bottom. Therefore, you realize that this market moving from here to here at the bottom, this is a clear indicator of a down trade. A down trade has got the support points, the resistance points. Support points, realize them, they are here. Let me show you the support points that you must be able to understand. For example, here, for example, let me show you clearly. Let me use another slot. That area, that is your first support point in a down trade. Resistance points, they are very shown. Let me show you what they are. Here, that is your resistance area. Because a resistance in a down trade, it is upper side. That's why when it reaches that point, it is resistant from going further upper, hence it is pulled down. The other support point is here. Let me show you. Here. This is another support point because as you can see, it is below this area. This below here. This here. So it is a down trade. It moved from here, it went up. This was a major pullback. Also, as you can see, they moved up. They moved up to this point here. Therefore, you understand that this is your support area, another support area, and because the distance between this area and this area, this distance, let me show you. Let me show you. The distance here, this distance between these two support areas, you understand that it is not as compared to this area and this, which are the two support areas. These areas, these two, the distance between here and here is a bit higher compared to a distance between this and this area. Therefore, it means that the trade is almost at the turning point, because the power that was from here, the power that was from here, the power that was here, power that was from here to the bottom here is not compared to the power that is from here to here. This power is great, it is much compared to this. Therefore, you understand that because of this distance being so close, the trade is almost to the turning point. Therefore, you will realize that it has a small pullback up to this area. These are pullback, guys, from here to here. These are pullback. The pullback, they show that the trade is almost to the turning point, and you can see it went just a little bit, then they reached to its turning points. They resumed an up trade, as you can see here. This, they resumed this up trade. Therefore, this is basically the down trade, and this is the up trade. Up trade means it goes up. A down trade means the trade goes down. You have understood? Let me explain to you what is a ranging trade. A ranging trade, for example, here, this is a ranging trade, because you realize that it goes up, the trade goes up, then it goes down again, it goes up, then after reaching this area it goes down to this area, it goes up again here, it moves down here. It initially moved up to here, then it went down here, it moved up here, it went down here, moved up here, it went down here, it moved up here, then it went down here. You realize that in a ranging trade, it is so nice to trade, because the trade is moving up, it is moving down to resume the support area, moves up again, moves down again. What you are supposed to understand is that how to identify when the ranging market is completely done, or when it has reached to the end. You realize that for you to know when a ranging market is ended, you start to realize that from the bottom area, bottom where it was here before going up, you realize that if it were moved in a down trade, it will start resuming some smaller moves. It moves from here up to here. You realize that it went down up to here, it went small, then it went back the bottom area. So wherever you see this kind of chart, this kind of pattern, it shows that the ranging is about to break, and therefore you should be targeted at this area. When it completely break at this area, then you have to sell. It will definitely go down. Understood, guys? Yeah. That is done. I'm going to explain to you about the choppy market or choppy trade. This is an example of a choppy trade. Let me identify it so that you can understand better. This is a choppy thread, because you come to understand that you are not able to know, is it going up, is it going down, is it going up, is it going down, is it going up, going down, going up, going down, going, as you cannot really tell what the trade is behaving. And guys, let me advise you, if you are a trader or you want to begin to trade, you have to understand this area. Wherever you see a choppy market trade, make sure that you are out of the market. Just get out of the market. Don't do anything at the market for the time being. First wait until the choppy market is over so that you can start resume your trading, because at this area people lose a lot of money, people lose trade, and they know what I'm saying. So never allow a trade to get you or to get you at the middle of this area. Wherever you see a signal of two candles or that candle that are not really well explained, or you cannot tell what they are doing, just leave the market. Don't execute any market there, because you're going to go a loss. You're going to scratch your head, you're going to pluck out your hair, you're going to get confused, you're going to be so much confused at this area, because you don't know whether you're going to go at a loss, going to go at a profit, because the market is not well understood. You cannot understand the market at a choppy market. This is where people lose money. Therefore, guys, do not get tempted to get to the market at this trade. This trade is high risk. It highly goes with people's money. I know what I'm saying. I know what I'm explaining. Therefore, guys, I thank you so much. Hope you have understood the concept. You have understood the various types of trade that I've just explained to you. Therefore, remember this choppy one, choppy market, the down trade here. So you can see this. These are down trade, this, and the up trade. So you can see this is an up trade, guys. These are up trade. Hope you have understood them all. The up trade, the moves up, the down trend goes downward. The ranging trade, it revolves within same area. The moves up, down, up, down, up, down. For the case of the choppy markets, I've explained to you how it looks like. You cannot tell where the market is going. Therefore, be cautious. ensure that you don't lose money because you've just been explained some bit. Do not take risk at a choppy market. Therefore guys, I thank you for being here. Thank you for understanding. Thank you. If you find it of help, apply the concept that I've taught you. Thanks. Bye bye.